Okay, good evening, everybody. Welcome to this evening's ACY Securities webinar live forex market review. My name is Duncan Cooper. Before we get into it, if you can read through the disclaimer. If you're on our YouTube live stream, I can't see the chat. So if you want to come and talk to us, just use the link that I've given you there. You can just follow the link and come into the webinar so you can talk to me. Otherwise, you can just watch from YouTube. Right, so please read through this disclaimer. Those in the webinar, if you can just questions to the chat box or the question box, that's fine. Feel free to ask. So I'll just give you time to read through the disclaimer. All right, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities, and I'm a full-time trader. I've been trading now in the forex market for more than 15 years. I've been mentoring clients for more than 10. If you want to contact me, then my email is there on screen, duncan.cooper@acy.com. You can follow me through the week at our website, acy.com. Go to the market news tab for my analysis. On our YouTube channel, ACY Securities Australia, and you can connect with me as well on Twitter and LinkedIn there. So if you want to jot anything down there, just leave it on screen for a few moments. As well, through the week, you can connect in our Telegram channel. Just contact Nathan.bray. His details are at the bottom. I'll put his details in the chat momentarily. As well, if you need access to my chart layouts and templates, simply contact Nathan. He'll assist you in setting up. So I'll put that information in the chat. If you've got any questions about opening an account, for example, I've chat with Nathan. All right, that's in the chat. As well, coming up on Monday, we're just having this webinar on Monday, the Inner Circle webinar. We're letting anybody come to this, but really we let people come onto the mic and talk to us. They can talk to us about their trading. We can bring charts up, review trades, whatever anybody wants. So Nathan will select those that can come on the mic and talk. I'll be there to talk to you. If you'd like to get access, just contact Nathan. His details are in the chat, and that's Monday the 20th, starting 8 p.m. Sydney time. So just contact Nathan to get access to that. All right, with that in mind, then let's get into, we have quite a risk day ahead of us. We've got coming up 10:30 p.m. US unemployment claims. That's not too risky, but 11:15 p.m. for the Eurozone, we've got the interest rate decision. Policy statements, press conference at 11:45. Expecting a 50 basis point rise there. Of course, Swiss bank was in trouble yesterday. So I guess the theme at the moment is, what are central banks going to do in the face of the shakiness of the banking system that seems to be coming around at the moment? So we'll just have to wait and see. Of course, the likes of the euro dollar, euro yen heavily sold off yesterday. So with that in mind, let's get to the charts. So I wouldn't be trading a euro pair until after the event. So let's just start with the dollar index. Now, of course, the dollar index, I think 55% of the dollar index makeup is the euro. So the monthly chart, now we are back above this monthly level of support, 103.82. And we may just have had a week down. We're already positive for the week on the candle, but not quite positive to last week. So depending on what the rest of the week brings for the euro, if it continues sells off, then we may well see a positive week by the end of the week. All right, so day chart. Now, day chart here has moved up from a lower bottom. That's because we had a week down. So key level to watch is still 103.82 long term. Can we hold above that level? Can we maybe continue the US dollar strength that we saw in the month before? To the SP500. We did have a negative day yesterday. We were a lot lower yesterday than where we finished. So there was must have been some covering after all the shenanigans were happening in Europe with Credit Suisse. I think Swiss Central Bank, from memory, has come in and offered funding. So that may be just lessen the risk to the market. But the SP 500 there's in a downtrend, starting to hold below day support there at 39.19. So could well be seeing a further decline there from that level. All right, I want to go to the pound dollar first of all. And it's already failed at 121 maybe. And the day chart up here, let's go to the weekly chart first of all. If you haven't been watching, we've had a 62% retracement on the weekly rally here. All right, back up to daily chart resistance from over here. Not a perfect head and shoulder pattern. It's in the middle of a trend rather than the top of a bottom, but there's definitely a left shoulder head, right shoulder kind of thing going on there. But it's held at 62% of the weekly range. We started to sell off down from 122. And the 4-hour trend here is down. So I would be drawing a fib from high to low, monitoring the retracements. Now, I can see here last week's high that we've moved above through the week. We've just tested it today and we don't want to move back above it. So we might not get up to a 62 level or a 79% level. Today, to the 50-minute chart, you can see here we've had a nice push up to last week's high, failing at the figure, selling back down. So I would be watching to see, if you're not already in, can it come back up to the figure? Does it want to hold there? Can you trade it down from that level there? You could be drawing a fib across that drop that we've just had. 79% at 121.03. You could be just putting your stop above here. Or if you want a longer term position, earlier in the week we failed at 122. We've moved below 121. Are we now failing at 121? You could be selling at 121, stop at 122 and give the market some room because it is highly volatile at the moment. Having a very short stop could mean that you just get stopped out and then the market goes the way that you're anticipating. So it is very volatile at the moment. So I wouldn't probably be using very tight stops. Need for a wider stop. All right. So are we failing up there at 121? Does it come up and give you another opportunity to trade down? Has anybody got short the pound dollar today? Anybody got short up here at 122 earlier in the week when I was talking about that level? Let's have a quick look at the pound yen. As I've been saying on the pound yen, I've been looking at this range as the trend down. This has been corrective and we have been selling down. I will be dropping to the 4-hour chart at the moment, looking at very large drop yesterday. Imbalance there. It's always very difficult when we've got calamity in the market. We get these massive drops. Sometimes those massive drops are then filled over the next couple of trading days. Sometimes they're not. So at the moment, I will be just monitoring that range. Do we start to come up? The 79% level, filling most of that imbalance, we get back up to that weekly resistance level that I've been discussing for the last week at 163.03. Now, can it rally all the way back up there? I don't know. But what you have to look at when we're getting these massive runs down on some of these pairs at the moment is they're at discount at the moment. They can still continue down if we still have a very risk-off environment. But the lower and lower they go, the closer you're getting to the bottom for a rally back up. So it's always the case that you taking the best opportunity to trade would have been up here where we were kind of at resistance. And then if you were getting in up there, you had the fortune of that drop. Now it's difficult to get in. So I don't like to be selling at the discount levels. If the trend's going to continue down, I would much prefer to see a suitable rally, okay? So I'll be monitoring the 62% level and the 79% level for failure intraday on the pound yen there. All right, just want to have a look. Just clicking through some charts on my own screen. I'm just going to go to the euro dollar. All right, euro dollar. So we had a very large drop down. We failed. This is a weekly top that we failed at over here. And to the day chart, it was a 79% area of this range here. All right, very good structural level of resistance there. And of course, we sold down from that level. Back down to support. Now, of course, we've got the interest rate decision coming out tonight, so it's going to be a little bit harder to jump in right now. But I mean, that's entirely up to you what you do. I will be monitoring the range of yesterday at the moment. I mean, we could rush back up. I can see that we got last week's high. This dashed line is last week's high. We've got some highs over here. So a logical level for me to see that I would like to entertain would be up here at the 79% level. But whether or not we can get there, we could definitely get there when the Eurozone does the interest rate, depending on what comes out. But if we don't get any volatility to drive up, then it'll probably just sink and then you won't be able to get in because it'll move real quick. If you're wanting to maybe entertaining the risk, you could start to watch to see if we fail at central pivot point, and then do you want to be in the market when the news comes out? That's the question. So at the moment, what I can see up here is last week's high, 79% fib, and the figure here, 10700 to 10707. That's less than 100 pips away, it's about 80 pips away. We could definitely be up there today. So that would be a definite level I would watch. And then the 107.36 weekly resistance level. And I know we're a long way away, but that's a massive drop. There's a few imbalance. There's a 15-minute chart imbalance for sure. Started round about here. There's a small one there, but if you kind of drag it down, because there's a large one on that candle, that kind of area there may need to be traded back into. Or not, but I was looking for a short today or over the next 24 hours, I would be looking up to the 107 area and the 79% fib. All right. Got to learn to pick your battles. You don't want to be selling down here where this is discount and at support. Okay, now when the news comes out today, none of us knows what's going to happen. We could come up to this area, okay, start to hold. We could even come down to this area of support, 105.33 down to 10500, last week's low there as well, and hold there and then move back up the range. So those are the two areas that are going to offer support or resistance through the day if we get a major move one way or the other. And then the market wants to do a reverse. So just have to monitor. Assuming that the market doesn't go chaotic when the interest rate comes out and it's rather subdued, I would look higher up for a sell if price can get up there. And if it can't, I'll just have to wait for a better opportunity that I can see starting to develop on the chart, okay? The euro yen dropped in excess of 500 pips yesterday. It dropped pretty much 550 pips approximately. So ranges are very large at the moment. I would be waiting for this to settle down a bit. I would be monitoring, because the size of that drop has traded down to a weekly support here. And on Tuesday's webinar, it's not to shout my horn, but I did have a fib drawn across this range and said watch the 79% level. All right, if you got short at 79% level, stop above the high, you were happy yesterday. All right. So at the moment, difficult going on some pairs because we've had that massive drop. We've hit weekly support here. And I am, as I said on Tuesday, I am looking at this as the trend. I am looking at that move up this way as corrective and then a move this way. But of course, you have to be in to be able to trade down to there. Now that it's got highly volatile, how do you get in? Up here was the area to look for the opportunity to get in, not down here where we've hit weekly support. All right, so I will just be monitoring the range that we've now formed on the current move down. All right, so 62 level here overlaps with this area of old support and resistance, 142.82, approximately 143 level. That level could well offer resistance. You're just going to have to monitor. Whether we can get all the way up to the 79% level, I don't know. You're just going to have to monitor. It's, you know, highly volatile at the moment. Let's move back to the day charts. And then the 4-hour charts. I mean, at the moment, this low here, 141.36.3, is offering resistance intraday at the moment. It's not wanting to get back to the central pivot point. You can see my figure numbers here. This pair is already done. It's already been moving in a range of 140 pips. So it's highly volatile. You're going to have to use relatively large stops, even when you're just trading off 50-minute charts. So it is holding below the central pivot point. So that is a level to definitely watch through the course of the day. If it comes up, tries to move above the central pivot point and then holds at the central pivot point, I suppose you could be looking for a trade down from the central pivot point. That would be an intraday area to definitely watch. So, you know, focus on the central pivot point, because in a very strong trend, if it's just going to have another 500 pip down at some point today, well, you may not get too much time above the central pivot point. So if we do come up to that level, watch it for failure. Andy, you're asking me, are these sessions recorded? Yeah, if you go to our YouTube channel, I will just give it to you. YouTube channel. Go to our live section. You'll find the live analysis webinars, recordings will be found there. Okay. There's the live stream right now, but once it's recorded, it'll be there that you can go and review. Let me just get back to my charts. Okay. So some pairs are difficult at the moment. That's just the way it is. You have to, you know, the euro yen moving down 500 pips in one day. Yes, it can do that when we're risk off, exceptionally risk off, and it's done that. But then it gets very difficult about how you can sell a rally, obviously. So you just have to weigh up the risk to the reward. It's going to be a lot more opportunity to get reward if you're selling up at a 62% retracement or a 79% retracement. Okay, rather than here, we're just at the 38% level of yesterday's whole range. So I don't like to trade at 38. All right, head over to the Aussie yen. Now, I put in the Telegram today that I was watching the central pivot point and 88.62. 88.62 from the day chart is this area of broken support. Looking for a test down here, 87. Downtrend unfolding down here. We've already hit that level twice today. You have 2 opportunities to get in there. So it's been reclaiming some of the drop. I mean, it could reclaim that whole imbalance, but at the moment it's wanting to hold there. So with the imbalances happening yesterday, we're not seeing them reclaimed yet. You can see here that the Aussie yen doesn't want to get too much above the central pivot point. It's holding at that daily resistance level. And also I said in my video today that this is the high area of the New York session. So we're not really wanting to get too much above the New York highs. All right, so it's getting pinned up there at daily resistance at 88.62, failing at central pivot point. You really missed the best opportunity to get short if you want to get short today. That was up here. It might come back up again, but really, if it comes back up again, it may move higher. It could still hold there, but the more it keeps testing this area, the more it might start to move back up the range. So Now, over the next 24 hours, 48 hours, I will be monitoring the range for a rally higher up if it wants to come. Sell opportunities already occurred there. You should be at break even by now. Waiting to see if it's going to continue its negative decline down with what's been going off at the moment with the risk off. All right. Aussie dollar has failed at daily resistance this week at the 62 level, negative day down yesterday. We're just trading back up. Just going to get rid of that fib. We're just trading back up within the range of yesterday. Filled that imbalance, so I don't need that on there anymore. There's yesterday's range. So we've almost come up to a 62% retracement. Day chart trend is down. I said earlier in the week in our Telegram, watch for a failure. Watch for a retest and failure at the 67 level. There's 67. We false broke above yesterday, moved back below, failed at 67. So now it's having a rally of the drop down of yesterday. Almost been to the 62. It's starting to change its trend there on the 15-minute chart. You've got a swing point break. So if you like that entry style, swing point break is turning that 50-minute chart to down now. So that could be a trigger to sell, just putting your stop above the high here. Looking for this to move down for the rest of the day. Okay. Covered the euro pairs, the pound pairs. Let's go to New Zealand yen. All right, 2 weeks ago, the validity of looking at that as the top of the range for a sell 2 weeks ago. All right, I discussed that at length, looking for that area to sell. And I was discussing moving down to support down here. So I can probably get rid of these yellow areas. Basically at the top there, we failed at weekly resistance. Go to the weekly charts. Weekly low, weekly top. We failed at the top here. There's another higher bottom in here though, but we've broken below that now. We're going to potentially be coming down to these levels. If things get very risk off, we could well be moving through those levels. So it's amazing sometimes when we're range bound and let's say you're selling up here and you say it's still range bound and something risk off comes and then the ranges start to break down. This has been in major consolidation for a number of weeks here. When we got to the top there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 3 months of consolidation here. Cameron, what is risk off? That's when the stock market, that's like when the banks are going broke. Stock market's crashing. That's risk off. So people don't want to have their money in risky assets like stocks. They want to move it, say, to like the US dollar or to gold, to something more, what they class as less risky. All right, so we're risk off at the moment. Stocks are getting sold. All those banking stocks are getting sold. It's risk off. In a risk off environment, yen pairs will sell down, which we're seeing. And this has been consolidatory, but if we break these lows, then this is probably going to break out of consolidation. So often, a risk-off environment can occur when we're going sideways and suddenly we break down into a trend and we break out. That's why looking up here would have been great for a short. I did say on Tuesday, watch for a bounce up here and maybe hold at this resistance area, which it eventually did. So at the moment, I'm not seeing a setup other than what you could be looking for is we've moved below the weekly level of support at the moment. Within the middle of the range, you could be watching that level for another test. See, we tested it early in the day and failed, came back up and couldn't quite get there. It might get there today again for a sell down. I really think you've missed the boat, the majority of the boat now of getting in because we're getting to the lower levels. Back to the day chart here. Put my colors back in because that's the top of the range at the moment. And this is the bottom of the range. So we're getting to the lower levels of the range. So I don't like to be selling war if we're heading into the discount. I need to be already short as we're heading into this area because price could stop, that could be the low, and this could all move all the way back up the range if it really wants to. Something comes out today which lessens the risk off environment, this will move back up. Of course, if something comes out and increases the risk off environment, well, this will move down. But in terms of the range there, we're at the discount stage of the range. So it's not the best area to be a seller. You should have already sold by now and holding a position to work out where you'll be taking profit, which could be here, or you're waiting to see if we can hit that area. Can we get a break below? Okay. So we don't get a break below. So a level to watch for sure is if we come down here over the next 24, 48 hours and we start to hold here a couple of days, there's a high chance it's going to move back up. All right. So I don't know if it's going to do that. I would need to start to see it hold here. I wouldn't just be trading down there because of the risk off environment. But if we start to hold, if we start to see other yen pairs holding and wanting to move back up their ranges, then that becomes a high probability area to look for a buy to trade back up the range. Okay. So, you just wait, because see how that moved above the top of the range, and then 2 days later it's turned around. This could move below, 2 days later it turns back up. You get the opposite trade at the bottom to move back up, so just watch for it. New Zealand dollar. Now in the Telegram I said watch the central pivot point in 61.91. Now we have today chart here. This is a weekly low. So I've got on my weekly chart, there's that weekly low. We've been below it, above it, below it, above it over the last 4 weeks. Red candle below, blue candle above, red candle below, blue candle above. But we are creating a bit of a double top up there at the 6270 level, which you'll see on the day chart. So how have we finally broken below this support low? All right, apologies for that, just knocked my mic over. All right, so are we fine at 62.70? Are we below 61.91? And are we going to hold below 61.91? All right. And aloof from me saying to the New Zealand yen day chart, are you saying with the distance between where price is now and the bottom of the range, there's no sell opportunity? Well, the sell opportunity is to sell against resistance. In the bigger picture here on this weekly chart, here's the major range. We failed up here at 62% level, and over the course of time, we could be failing here to move down to the bottom of this range. So there's a number of ranges to think about how you want to trade this pair. Are you trading for the short term or the long term? Now, as we break it down to the day chart, we have, if we class this as a double top up here, then this is just a minor day support level there, but you need to know where it is. It's at 61.31, but I'm going to take it off. This is a stronger level of support from over here. It's a weekly low from back in time. But at the moment, we've got this double top potentially. So if we put the price projection on the double top, I know it's a few pips short, but I'm going to class it as a double top. This could move down to the 200% price projection down there at 58.92. All right. As well, I've also been discussing this as a potential double top. All right. And that double top price projection comes in at a similar area. So I might just color code that one to the bottom there. I'll put it underneath. So the top of that box is the bigger projected pattern, and we've got a smaller pattern here. Or in fact, I can just drag that over. All right, that's close enough within a pip or two of the projection. So to me, there's the actual support level to really watch is this low here where we moved up from to create the double top. So that's at 60.83. So there's enough space to trade down there. It's a question of where do you get in if you're not already in. And moving this down to the 4-hour chart here, we have a downtrend, but I don't really want this to move back above 61.91, because if it does, then 61.91 is potentially weekly support once more. I need it to be resistance. So the area I'll be watching is the central pivot point for the day and 61.91 to be resistance. If we can get up there, I don't mind if it comes up to the 62 level and then fail, but in a perfect world, just coming up to there and then holding, and you see a nice tight trend line break or something to get yourself short. To trade in line with that day chart double top and the weekly double top. So bias is to the downside as long as we can hold a retest at 61.91 or up to the 6,200 level. In the volatility at the moment, whatever news comes out later in the day, this could easily spike up and then withdraw back below 61.91. Okay. Sorry, Liff, I thought you were talking about the New Zealand dollar. You was talking about the New Zealand yen. I don't think there's a sell opportunity there to look for really on the New Zealand yen. As I said, we're getting close to the bottom of the range. Should have been short already, really. So I just think it's too low down to sell now. It could move obviously a lot further down because we could have some more banks that get a bit shaky as well. So I think the New Zealand yen is too far down. I thought I misread your statement. I thought you were talking about the New Zealand dollar, but you're talking about the New Zealand yen. And I did say that the New Zealand yen was too far down. All right, so whether or not this New Zealand dollar can pop up to that perfect level, it hasn't been able to through the course of the day at the moment, but the news may just create a bit of volatility, pop it up there for you, or it may get up there tomorrow. All right, over the next couple of trading days, that is still the level to watch. Yeah, if we're going to start to move down long term now, if you move back to the higher time frames, over the last month and a half, it's a weekly chart I've been discussing. You know, the overall picture, the big picture of the New Zealand dollar failing at the 62 level of last year's range, the double top forming up here. I'm holding a position to trade down for a test of last year's low. Now, whether or not we get that, but you know, for price to continue down, it needs to start to break the support levels and start to hold below the support levels. So can it now hold below 61.91 to come down to the next support level, which is 60.47? And then, of course, that level needs to break to get down to the next bigger level, which is down, you know, at last year's low area. There is another low over there, but that's a long way back in time, 2020. This low here was formed in 2022. So that's why I'm referencing that one. After that one, I will be going down to this one here. All right. So if you are short the New Zealand dollar and you're holding, you want, you know, 61.91 now, don't want price to keep moving above that level. You want it now moving down towards the next level and breaking down. Okay. So we might see a retest of that level or not. We'll just have to wait and see. All right. At the moment, doesn't want to get up there. All right. To the dollar Canadian, to the day chart. Now, Tuesday, I said, watch the weekly top up here, but it pulled back to the daily top area here, putting in another higher bottom. You've already missed the boat, unless today, you know, this has become support here. We've moved above this top over here. I'm just pausing because I've got something in chat. Alif may saying, please. All right, so you lost your network. Back to your question on New Zealand yen. I think the New Zealand yen is too low down to sell now because you're getting down to the bottom of the range. If we go back to it, if I draw a fib across the range, I'll draw it that way. This being zero up here, we're already 80% down the range. There's only 20% left. We're too far down the range to, you know, you can sell and try and trade to the bottom of the range, but it becomes less probability the closer you are to the bottom of the range. We've already done more than 3/4 of the range. So for me, it's too low down. I would be looking at something else. All right, I would be looking at the bottom of the range for a potential move back up if the bottom of the range can hold. Okay. All right, back to dollar CAD. So we've pulled back to day support here, higher bottom, higher top, another higher bottom forming. We did move below weekly supports, but we're back above it. So intraday at the moment, pulling back to that level could be the level to watch for support, 137.05. Now, whether or not we can pull back to that level, well, that would be a great area to watch for, 137.05 to 137.00. And if you draw a fib across your 4-hour range for continuation, then in between 62.79 is that weekly support there. 79's at 136.92. Got the 13700 level in there. You've got that weekly support level in there. That would be a great area to watch for a dip. Dip, hold to move higher. All right. In line with the trends. All right, the trend is up on the day chart. It's had a pullback. It's had a pullback. That's the last day chart low here. It's had about a 60, I think it was a 62% pullback. There you go. Pull back to 62 day support. It was also last month's high. Right, you know, I've talked you about last month's highs and lows being support and resistance. There's last month's high. We broke above last month's high. It's become support. I mean, that was the perfect area to look for your buy opportunity. We've moved up, impulsive move up. We could pull back now to weekly support for then another move up. All right, you know, that's the best level to look for. Whether or not it can pull back to that level, I don't know. I'm just watching the euro dollar on my other chart starting to head down towards 106. So the weakness is maybe coming back into the market at the moment. Just drop this down to a 15-minute chart. All right. Now we have been very close to the 62% level. So maybe it's only having a 4-hour chart range 62% pullback. It's getting back above this central pivot point. You know, you could, we went through the 50-minute fib trade entry. You could watch for wherever this runs up and then draw a fib and see if it pulls back to 62.79. Does it start to show you a little bit of support? And then you might want to think about jumping in to move up. But the better level, you know, if I was playing my normal patient game, I would be waiting to see if price could come to a level that I would like. A trader that I learned from many years ago who traded support and resistance, one of his phrases was that he says, I'm gonna wait for price to come to me. So like how I show you about showing you what levels I'm watching, I identify the levels that I want to trade at, and then I'm waiting for price to come to me. All right, so price doesn't always come to me in a day. It's come to me a number of times this week already. For example, on the pound dollar, when we hit 1022, I said watch for a retest and failure. So then I was looking at 1022 for a retest and failure. I was waiting for it to come back up, and it managed to come back up. On the Aussie dollar, I put out in Telegram this week, look for a failure at 10700. So I was just waiting for it to come there. Now, it may not get there, but it got there and failed, gave you opportunity to trade down. So sometimes the levels I'm looking at, price doesn't do what I want, but through the course of a week, often price will come to a level that I'm watching, and then I can trade at the level. All right, dollar franc. If you're in our Telegram, I put this out ahead of time to look for this double bottom. Confirmation of the double bottom was a break of that little inside day. So you've really missed the best opportunity at the moment to get in that dollar franc. If we break it down, for those that haven't been watching the dollar franc, on the monthly chart here, there's a potential of a double bottom here on the monthly chart. There's also, on the weekly chart. All right, is it going to hold here for, well, the double bottom that I was looking at this week wasn't based on a monthly chart price projection, just based on what I was seeing from the day chart potential. Okay, but there is the potential there for a double bottom on the monthly, which would, price projection would be all the way up there at 112.10. Don't know whether we can get there, but because this is rather range bound for many years, it's been in this sideways pattern. But as we move it down, well, to the weekly chart, I was getting my double bottom price projection. Double bottom here. Okay. Could be a little bit of an inverse left shoulder head, right shoulder as well, but it's pretty much on the, you know, I'm using that low to that low there for my double bottom, but this could be a triple bottom, quadruple bottom over here. Using this range for my price projection. You had the opportunity to get in at the 79% area before it popped up. All right, so we're already up, you know, 200 pips or more. You've missed the best opportunity at the moment, but the thing to consider now, there'll be further opportunities to get long. Sly was saying with the Credit Suisse issues, dollar franc can potentially go up beyond its long-term range. Well, it could. I don't know. It's, you know, it's got to get beyond this range first before we get up to the top of that range. But, you know, in severe times of stress, usually the US dollar strengthens. You're going to have to go back to what happened in the GFC. All right. So whether or not, first of all, in terms of this double bottom that we're watching, can we break this high point here? Because that double bottom price projection up here only comes into fruition if we can break this high here. So the first thing to be watching at the moment is what happens if we get up to here, because that could hold and then we move back down the range. But over the next week, you know, if we can move above there, then the next key level to watch would be we move above that level. Does it become support then for, yes, that move higher to move up to this level? All right, but for the double bottom to continue up. All right, now getting in, of course, yesterday was the better time to get in because that would maximize your risk reward. Trend on the 4-hour chart is up. I will be drawing a fib across the trend of the 4-hour chart and monitoring the pullback 62% level, 79% level. Okay, it might not get such a severe pullback to get to those levels because if we move to the 15-minute chart, we've been a little bit below the central pivot point, but we're back above it. All right. And this little area of consolidation before we broke higher yesterday, this area is acting as support. We just dipped below it, but, you know, if you see price action during the day now come down to this area and hold, then this is your buying level to move up. All right. It's always difficult when we start to get all this volatility in the market to try and get in. When, you know, even before the Credit Suisse thing actually, I think, came to the market yesterday, the double bottom had already been put in place and confirmed for a move up, and then, you know, drama unfolds, and that just obviously enables the trade to move up. All right, now it's a question of how do you get in. So that would be a good area to watch. Or if you start to get support at central pivot point here, watch that level to move up. All right. So that's your Swiss franc. Watch that central pivot point area. This colored area through here from those tops of yesterday. Dollar yen is actually put in a lower top now on the day chart. The significant point on the dollar yen is the monthly top that we've folded it over here. We have been above it, but with all this risk off drama, we've moved below it and we couldn't quite retest it on the day chart this week. So we moved below it and see how we couldn't quite get there. So clearly the market was watching 135.16. So that's going to be a level to watch over the next week for sure. We could come back up there and retest, still hold and move down. To the downside, as I've been saying, I don't see a trade here at the moment to get in, because up here was where you want to get in. Might see something on the 15-minute chart to drop down, but in terms of, are we going to continue down long term? There's a weekly low over here that had been support here, became resistance through here, became support there. So I'd watch 130.40 to be support potentially. All right, so the 4-hour chart, well, it's getting a little bit range bound. It's holding at this low here. This could move back up to 135.16, but I would potentially just be monitoring. If you want to trade the dollar yen at the moment, I'd be monitoring that range. Can it come up to the 62 level, 79 level? All right. I just, trying to trade here when there's obviously some form of support there. This is selling at discount. The intra-week supports. Okay. If I want to try and trade with the day chart trend, which is down at the moment, I want to sell where it's expensive, which is up here for the week. This is where it's expensive for the week. This is where it's cheap for the week. All right, so I will just monitor that range. Can we get back up to a 79% level? That would be a perfect scenario to see what happens up there at 134.48, or even if we can come back up to 135.16 up here. See what happens for potentially another failure. Slav, you're saying, how do you explain the relative strength of the yen against the US dollar in the risk off? Well, in risk off, capital flows to the Japanese yen. So that's why the dollar yen's going down. All right. More money's flowing to the yen. In a risk-off environment, yes, money flows to the US dollar, but more money's flowing to the Japanese yen. That's why it's getting stronger. People are just parking their money in Japanese yen. It's a safe haven for the money. All right, that's what's happening. All right, so because of dollar yen there, when we move it down to the 4-hour chart, it doesn't look that inviting at the moment. Intraday on the 50-minute chart here, it's only wanting to get to the central pivot point, but it is rather range bound here at the moment. So clearly, as I've given you that rule before, in a strong trend up or down, this is down yesterday. Price doesn't spend too much time above the central pivot point the next trading day. So not too much time above there. So we could revisit the central pivot point. And if you had a long-term view that this is going long-term down at the moment, then look to the central pivot point there intraday. You might be able to get a tight entry that works for you to trade down. All right. Over the next few days, if we break the low here today, we can see a little bit of resistance forming here at 133. Over the next 24 hours, 133 and a rally could be resistance. But at the moment, I'll be looking at the central pivot point for a retest if it can do it, if you wanted to get short intraday. Slav, you want to look at the franc yen? Let me look at gold first and I'll do that. All right, so gold is going to move higher in this risk-off environment, or, even though it's risk-off at the moment, we are at significant historical high points. All right, the market knows that. So I've heard economists saying this is going to $3,000 over the last month and a half. I don't know if it is or it isn't, but I just use technical analysis. So I don't know how they're coming up with their 3,000 information. But to the monthly charts, we are holding at this historical 2011 high. We are on the monthly chart, double top, lower bottom. Is this forming another lower top here? You could say that as a left shoulder, head, right shoulder. So we're at key resistance. So if there's ever time to sell it, is when you're at key resistance. Weekly trend is up at the moment, but was that the terminal high to fall down, rally to fall down? We take that high out, then of course it's not. So it's difficult to work out whether or not we should be trading up or down. Edwin, you're saying with all the banking issues means more investors are putting money into gold. That means that has an impact on it moving upwards. Well, it does. Yes, that's why it's moving up. Yeah, money's flowing into this as a safe haven, but doesn't mean to say it's going to move above 1920, or it might move above it, but can it hold above 1920? As soon as that risk off switch, as soon as the risk off starts to subside a bit, can gold hold at 1920? All right. So I know that range just there, we got that downward range rally of the monthly chart there. We've been a fraction short of the 79, so we could certainly get up to 1972. All right, and we have put in a higher bottom here on the daily. So this is just a barrier at the moment for this to move higher. I did notice on the 4-hour chart that this imbalance here hasn't quite yet been filled. In fact, the imbalance, the whole imbalance is there. Right, so the market's obviously coming up to fill this imbalance, and can it take out the high? So what do you want to see structurally at the moment? Of course, if you're not long and you want to get long, you don't want to be getting long into resistance here. You'd want to see that move up. You'd want to see that to become support for them to move up. All right. So we're at a key level of resistance where we could fail, but the weekly and the day trends are up, and the 4-hour trend is up there. So there's no signal to sell, but I wouldn't be buying at where we are because you're buying into resistance at the moment. That level needs to become support to be a buyer at the moment. You should have already bought because you're definitely at the expensive level at the moment to where people could decide to take profit and also decide to sell. All right. So you want to see price clearly move up to a further high. 1920 becomes the support for then the opportunity to move up. All right, Slav, you want me to go through the franc yen? All right, I don't have a massive amount of data, about 18 years worth. I don't know if this is the all-time high because I don't have enough data to the left. So that's always a problem when you don't have all the data. But on the monthly scale here at the moment, we're definitely in an uptrend. High tops and bottoms. On the weekly scale, I can see that we've had a 79% failure there, and the trend is down. That week, this week's taken out 3 weeks, so that's not strong at all as we're moving down time frames. So if you thought that was a 79% failure from the weekly perspective, then like all the other yen pairs at the moment, it's difficult with that big drop. I will just be monitoring for a rally. Okay. We know that that's potentially a 79% failure. So then I would monitor the rally for our charts. It's always difficult when you've got those massive drops. What is price going to do? We know, generally speaking, if it wasn't risk off, price would just start to come back up and fill the imbalance. Sometimes when it's risk off, it can be a long time before we fill the imbalance. So I'll just be watching for a rally. Are you already short, Slav? So your long dollar franc. So but this franc yen that you wanted me to go through, you short that already? I don't know. I know you've put in your comment there. With Credit Suisse issues, dollar franc can potentially go up beyond its long. So you're thinking because of the Credit Suisse issues that the franc's going to weaken. I don't know if that's truly the case, but I just think, you know, the dollar franc's going up because it's hit support, and then something's come into the market to help that movement up. I don't know if the banking issue is going to make this significant weakening of the Swiss franc. I mean, it could, but you know, you'd have, you know, I don't know what the Swiss economy is because I don't look at it that closely, but the Swiss, you know, economy would, or the Swiss as a currency would have to significantly deteriorate at the moment for, you know, if you go back to the dollar franc. You know, when we look at what the dollar franc's been doing, and I don't know what the current process is on the dollar franc. I'm just going to the monthly chart here, but through this, where was that massive? We had a massive drop down here, where through this period here, the Swiss bank was holding their currency above, I think it was 1991, around about that level. As it moved down, they came in to weaken their currency, so that price would hold above, would stay above the 90 level on dollar franc. And then on this particular month, they came out and said they were no longer going to do that, and the thing just dropped. But since then, you can see that area is still very much in this kind of range. All right. So I don't know whether the Swiss bank still protects that price point. I mean, clearly at the moment, it's holding there. All right. But as to whether we can significantly break above these highs, I mean, this would be a great time to get long if we are, because this could be just a long, let's just squash this in. This could just be a long period of consolidation at the moment for a significant move higher. All right. So after long periods of consolidation, you get long trends. Now, it all depends how much this consolidation period is based on the Swiss bank coming in and defending the currency at a certain price point. I don't know how really the banking system effect that's going on at the moment is going to determine whether the dollar franc significantly weakens to the US dollar. All right, but you know, getting long here, you know, is the time for that. If we're going to break above these highs, getting long down at the bottom is where you want to get long, isn't it? To the dollar franc. Of course, if the franc's going to significantly weaken, we may well see then the franc yen move down. But of course, you've got two different currencies there. So Slavia got long at 91. All right, so it's happy days for you. Risk-free. Now you're just waiting for the whole thing to unfold in your favor. So, I mean, I'm hoping I'm short the pound dollar from higher up. I'm hoping that, you know, something implodes in the UK on the banking scene as well. You know, I want the pound to go down to 103. So we're definitely getting some of that negative volatility coming in. How long it's going to remain on the risk off side of things, we'll just have to wait and see. But you know, getting long down here, even if this is, you know, it comes all the way up to 101, 101.50 area up there. You know, that's a good trade. You know, the 10.15 level, you know, that's 15, what is that? Gonna be like 2,400 pips. My maths is right. Something to brag about down at the pub. All right, everyone. So very much a risk-off environment at the moment. It's going to be interesting to see what comes out later in the day when we have the press conference. Do they still come out in the Eurozone with a 50 basis point rise, given what's happening at the moment? Or do they come out with a 50 basis point rise, but then say something like, well, we'll have to wait and see next time whether we'll do an interest rate change at all? That's going to be negative for the Eurodollar if you say that. I think I've seen some headlines saying where they need to have 50 basis point rise now, and then another one, and then another one. So if that kind of rhetoric changes, then we will probably see the Eurodollar drop. All right, so it'll be interesting to see what happens there. Of course, next week we've got the FMC statement where there's I saw some headlines today saying they might even cut rates. I don't think they're going to cut rates. Irrespective of the banking sector, they theoretically need to get their hands fastly around inflation. So we'll have to wait and see what that federal fund rate brings next week. But the first interest rate decision is tonight. So I'll be very aware at 11:15 p.m. It's going to be highly volatile for the euro. All right, euro crosses, euro dollar, euro yen. All right, very volatile. Better to be out of the euro pairs at the moment until that passes. Unless you're in from way, way higher up, like, you know, you got short up very high yesterday on the euro yen, you could be just sitting there pretty hoping it's going to have another 500 pip move down. So we are very much in a risk-off environment. It is highly volatile. You don't have to trade. It's worth saying you don't have to trade when it's highly volatile. You can wait for things to settle down a bit, ranges to get back to normal. You know, the euro yen's doing a 500 pip range yesterday. All right, you need wide stops when you're trading ranges like that. So Cameron, you say you still don't understand how raising interest rates releases inflation. To me, it's just taking money from the retail sector and making the banks fatter. Well, it might make the banks fatter. When interest rates rise, then the banks may still have the same margin between what they borrow money from say, the central bank, and then what they charge to the consumer. So maybe I don't know what the markup is, but maybe that they have an average. Let's say the markup's 2%. I don't know what it is, so don't hold me to that and say, Duncan, you're miles away. But let's say the markup from what they borrow from or use as a reference point, whatever the Fed funds rate is or the central bank fund rate is. Let's say they have a markup of 2%. If interest rates rise, their markup's theoretically the same, unless they're tweaking their markup. The idea about raising interest rates so we get inflation down is that if you raise interest rates, it costs more, obviously, to pay for your borrowing. The bank doesn't necessarily make more money because if they're having to borrow money from, say, the central bank, they're having to borrow at a higher rate. So their margins may well stay the same. But yes, theoretically, they could make more money, but it's taking money out of the market, so you can't go down the shops and spend it, which then doesn't drive price up. So that's the theory. All right. But certainly in Australia, the other side of the coin is if our currency starts to drop for whatever reason, that's an added inflationary thing as well, because our currency is is worth less to the US dollar if we're importing things in based on US dollar pricing. So we could end up with a double whammy there as well. All right. So in any event, the market will work it out how the inflation all pans out over the next couple of years. So we'll just have to wait and see. Anyway, the thing to worry about tonight is the Eurozone interest rate decision. We'll have to wait and see how that hits the market over the next 24 hours, okay? So with that in mind, I'll be doing more analysis next Tuesday on the seminar front, 8 p.m. Sydney time. Just join me there. We do have the Inner Circle webinar on Monday, 8 p.m. Sydney time. Contact Nathan to get access to that. You can't come to the webinar page for that. You'll need to contact Nathan. All right, other than that, thanks very much for your company this evening. Make sure you're trading safely, not too much risk in this environment at the moment. We're trying to survive for many years trading, not trying to survive for a week. Okay, you don't have to trade this week if it's too volatile. All right, everybody. So have a great weekend wherever you are. If you're on the Gold Coast where I am, it's red hot at the moment. So it'll be down the beach, hopefully, getting a bit of sun as the summer comes to an end. So have a great weekend, everybody. Thanks for your company. Look forward to seeing you next time.